Good afternoon and welcome to NYFP. This afternoon I'm joined by Steve Guilfoyle of Meridian Equity Partners. Hi Steve, thanks for joining me today.
Hi Remy, I'm glad to be here.
Well, in midday trade, we're seeing that the major U.S. stock averages have turned mixed. We did start out strong after earnings out from retailers as well as economic data. But what are you focusing on and what's driving the market right now?
Well, the market came in because that was something of a head fake. Inflation data came out, which was poor. Even the core rate was poor. So I think the market's getting back below that 1,200 level it was at. It actually broke through 1,200 this morning. We saw resistance around 1,208 on the S&P 500. It's back below 1,200, or it's about to be. I can't see it from here. It's going to see some support around 1187, 1188. If it gets through that, we see 1170 as the next level.
Well, now that we've covered what's happening here on this side of the Atlantic, I do want to ask you a little bit about what we got out from the Eurozone following Merkel as well as Sarkozy's meeting. Do you think the tax on financial transactions will have any effect on the U.S. markets?
Well, there'll be a tertiary effect, but I don't think anything that would change your strategy. They really came out with almost nothing out of the European meeting, and then they threw this around and they proposed some kind of European economic government with its own leader. They didn't come out with a Eurobond, which is what the weaker countries wanted, what the stronger countries really can't afford. I don't think anything short of that is going to affect trading strategy.
Okay, well, last but not least, before we wrap it up, we still have 2 more trading days this week. We have more economic data coming out as well as earnings reports, but what are you watching?
Yeah, we do. We have more economic data. We got more inflation numbers tomorrow. We have jobless claims tomorrow. And we got the Philly Fed tomorrow, which is a much bigger number than the Empire State number that came out last Monday. So those things are going to affect tomorrow's and Friday's trading. I'm still saying to play it kind of safe, play defensive. I'm looking at municipal bonds right now as kind of a way to get some yield. You know, they pay just a little bit more yield than the treasuries, but there's a tax advantage there that adds almost a full point. So you can probably get 3.2, 3.3% on your yield playing the right states, because there are 5 or 6 states that aren't good plays, and you have to do your own homework on that. But if you play the right states, the ones that are AA or AAA rated, you can get better than 3% yield right now on the 10-year.
Okay, Steve, well, thank you so much for weighing in on all these issues, and thanks for your insight.
Oh, you're welcome.